everyone, how you doing? Hope you've all had a lovely start to the week. First week back of the year. So yeah, hope you're all back into a routine and back into the flow. It was nice to get back onto the charts last week and just trade. It was lush. I figured I'd do a video. Obviously, usually would do a trade recap. Took a couple of trades last week. One of them I did on the Zoom on a Tuesday, which is on the website. If you haven't watched that, highly recommend checking that out. And the other trade I was going to do a recap on, but Phantom posted a good markup of it, and I saw more questions popping about news, like major news events. So I just figured I would do a video on how I'd view the news from an FP on Friday and how you could get involved. I see some people talking about like opening buy stops, sell stops, and trying to get a few pips. Like honestly, get in the bin. Like that kind of trading is not what we want to be doing. They're like the old school ways of trying to make a quick buck. They're not consistent. They're not something you want to do on prop accounts. When you've got a live prop account, you won't be able to do it because you would blow it because the trade would trigger in the time where you're not allowed to trade. So if that's your strategy sort of thing, you'd obviously have a hard time. There's other people that try and sort of guess the news and what way it's going to go. Again, wouldn't bother. Aggro and some of the slippage you can get. And again, I'll speak from experience because I've been there before. Some of the slippage you can get on NFP or CPI or ECB or, BOE or FOMC, they can do you out of 30, 40 pips. If your stop loss don't trigger, you had a 2 pip stop and it don't trigger and it does 30 pips, you are going to be working for tips up a pole for the rest of your life to pay off a broker. It's not a vibe. It's not something you want to be doing. So like use the same concepts to identify how to trade. Like it's the same stuff. It's always supply and demand. And I think Fridays is a really clean example. And the best thing to do right with this is just go over all of news events. Go over all the news events the past, 6 months or whatever. Obviously, if you're using the 1 minute, and just try and make sense of what happens. You'll notice 9 times out of 10, the reaction is playable. And it's the reaction that I would get involved with if I was going to get involved. I remember someone saying, I can't remember if it was like last year, volatility is a product of available liquidity. And it's really true. Like volatile times, everyone freaks out, but all it is just means there's a lot of liquidity. It means there's opportunity. If you're happy to take the risk, then take it, be at peace with it. But we need to make sure that we take the risk in the right way, in the right manner, and not just like a nutter, right? So, I'm just going to get into it. I'm just going to go over that 20-minute video or so. And go from there. Also, if you haven't noticed, I know a lot of people have asked for a trade assistant video. I dropped one on my YouTube channel today, so go and check it out if you haven't already seen it. Hopefully, it should sort out all the confusion around trading on your Mac, how to download it. Obviously, of course, it works on Windows too. So if you've got Windows and you've got MT4 downloaded, you just need to get Trade Assistant. I shared my colors, my settings, how I'd use it, what I use it for. There's probably hundreds of things more it does, but that's how I use it. So yeah, hope that helps. So again, remember things like structure and order flow, right? Never lie. They're the things that we want to be focusing on the most. And obviously we had this 4-hour level here, which, at one point had failed to create a high. We reacted off this somewhat supply level, remitigated this little level here, which of course caused our change of character bullish again, even though we are bullish on the 4-hour at the moment. And essentially you could say we're forming some kind of complex pullback, maybe to visit these daily levels. So longs make sense. Obviously, yes, this low essentially is weak because it failed to create anything. At this point in time, the high is weak because it also failed to create anything. So you're kind of trading, I know this hasn't been the nicest PA, and it's very hard sometimes to determine targets. And that's why sometimes getting out the next supply demand levels is ideal. But when you're coming into an FP, yes, it looks like we're stacking a lot of liquidity. And I did think we were going to run to hell. There's a monthly OB here, and I can see us potentially making our way down to it, or even taking this low out and mitigating deeper into this and then pushing higher into these levels. Obviously, this is a failed low, essentially. It never broke these highs. This has just held, possibly to build liquidity for a future move in price. So I was thinking we could run short into longs. We didn't, which is fine. So knowing this, we're confirming higher lows, right? We know that we've gone bullish, right? We've taken out this liquidity. We've tried to put in a new low. We've failed. This 4-hour level's held, right? If we go on to the 15, we can also see a very similar process has happened where we've reacted here to, I believe I refined this to it's in the 4-hour, remember, and I refined this to this 1-hour candle here, which again has given us essentially a 1-hour chop. We took out its low, took out its high. We played off of this sell to buy price action. And if we go to the 15-minute, we can see that we came in, we had a chop again. So after this mitigation, we took out this low, we took out this high. Now, in theory, right, this whole leg is weak because it failed to create. If this was a strong high, it should have at least broken these lows, right, and started to take out lows. It hasn't. We do have this POI here, which I thought we might hit to. But again, turns out we didn't. And again, it's like that order flow and structure, right? So at the moment, structure's showing us that we're bullish. We're aware there's liquidity underneath us, but of course, there's a lot of liquidity above. EOF says bullish. Order flow is maintaining bullish order flow, right? We're maintaining higher lows. And essentially all we're doing is trading off a higher low or a lower high. Obviously, we had this up here. I had this marked out pre-NFP as well. And, you know, it's a simple thing of, right, well, this is let me just clear up these. It's a simple thing of this is obviously a valid level of POI. This is valid, and what we have below is valid. Now, what you don't want to do is just set limits on everything, because bad news. And you don't want to be trading before the drop, like I said, because of slippage and whatnot. What you want to do is you want to have an idea, have a bias, but just see what happens. Trade the reaction, as we always say. So reaction means let the news drop, let it do its thing, and then play the reaction. Now, sometimes that might be on a 5-second only, and you can't get in on a higher time frame. But sometimes, like this on Friday, you can get in on the 1M, and you can make some serious wedge. So if we look at this is pre-NFP. Let me play it on. There's nothing on there. So we're coming into NFP, and we get this, right? So we run into this first. So this is the first mitigation. So we came up bullish and we mitigated this. Everyone says, oh, it's so random, NFP. Oh my God. No, it's not. Like, it's hit a level of supply. Okay. It's cleared out this liquidity. Now, on the 5 seconds, you could have tried to get in up here. There wasn't really any structure that got formed. We kind of just V'd in, and then by the time we'd come out, we'd already taken out the low. But what's important at this point is not to be like, oh, it's gone, or it's only going to the floor. Is come back out to the higher time frame and just reevaluate what's happened. We've now had a mitigation of this last level of demand, essentially, right? We've run liquidity into it. We've used it as inducement. This is essentially trading off the higher low. Okay. So if we're going to go higher, then we should start to see order flow coming on a lower time frame. And if not, then it shouldn't give us order flow change as a character. Okay. So at the time, you've got this. Obviously, I'll mark up chocky, wocky, doodah. We've got this, we've got that. And you can use this if you want for a level of some form of supply on a lower time frame. You could use this up here instead, because this obviously caused. Let's use this so it doesn't confuse anybody. So we've got this guy here. All right, we've reacted to it, failed to break the low. See if we get a change of character. Boom, we get a change of character. So now obviously we've got this guy here. Now again, a lot of the time I don't always like using a buy candle. I want to see sell to buy price action. You can go on the 2M, you've got your sell to buy wicks, 3M. You can go 30 seconds. There will be an OB there like this. So you can play the OB. You could just go to the 1M and you could just refine to the wick if you want. There's a chance you could miss this trade, obviously. But essentially, we've just had our entry model play out that we would look for if we were playing a normal mitigation, right? So if we were playing, you know, a normal day, let's say there was no news, if we had this set up, we would probably look at trading it, right? We've swept huge amounts of liquidity into the POI. We've had a liquidation, right? And then we've had a 1 minute flip, 1 minute chalk, V shape in, and we're with the overall trend. And what it's shown us is the bias has now realigned. And we are, even on the lower time frames, we are back showing bullish intentions. The higher time frames were still showing bullish intentions. So yes, I know we had a change of character up here and you might have looked at this guy. But what you have to remember is this whole structural leg is weak because it didn't do anything. It literally failed to create. Now I know you're going to go, well, leave it at this, but this essentially hasn't finished its move and we're following order flow, right? We're just following mitigation to mitigation with structure in our favor. So overall, this is showing us that, you know, bullish intentions are in the market. We want to play those bullish intentions. This is essentially liquidity. Yeah, we've got this guy up here, but if we're looking at a higher time frame, we should break the highs and truly break out of this range. So when you go on the 1M, you've got two options. You can either play this on a 1 minute here, and you know, you can have a 2-pip stop kind of in the middle of nowhere. You can try and put it below the low. You can, of course, make it bigger. Or this is where, when I say play the reaction, you would play the reaction. So you would go on the seconds if you have the seconds, or you'd wait for a 1 minute mitigation. So again, completely down to you how you do it. Again, just get data on it. Like I say, we've gone for this wick here. Remember, this is a 30-second level. So I'd have this mark like that because I want to see what happens when we come into it. And obviously from here, you start to get a push away. Now, you could say, I want to see a liquidation, you know, standard entry model. I want to see the logo before I look to get involved. Again, fine, whether it goes or not. Yeah, cool, it gets swept. So now it's showing you that it could be game on, right? Now, obviously, if you're on the lower time frame on the seconds, you could look to get involved here on the 5 seconds. If not, if you don't have the seconds, you'd already be in it on the 1 minute essentially, or you can look for another confirmed higher low on the 1 minute and then play from that. So if we go back to the 1M, like I say, you could already be in this trade. We've had a deeper push. We've had a nice reaction. If you used the wick, you wouldn't have got tagged. So this, again, this is where data gathering comes in. How often would I have got tagged? Would I not have got tagged? Could I have used the 25%? Could I have used the EQ? Could I have played the range? They're all things that needs to be going through your head. Like I say, if you're on the seconds, you've got a nice V shape. That was weird. You got a nice V-shaped recovery, you know, a liquidation. You could look at getting in here. What I would say is move that over, you know, so if we just mark this up, this is how, like, I am using the seconds again. I have been for a while now. They're very handy when you're used right. And this year is all about leveling up for me and progressing, making sure I'm growing as a trader still. I'm not holding myself back for anything. So, yeah, I've been, again, just gathering loads of data. I like it for things like this. I like it to confirm levels because, of course, we might come lower. You could say it's a big area. So I'd look at the 5 seconds. Obviously, why didn't I play this? Well, I want to see a liquidation. We've had a liquidation here. Why didn't you play that? Well, it didn't really give us what we want to see, flip and chop and everything. Look at the difference of this. Very nice V shape after liquidation. We react to this range here with this, oh, yellow, yeesh. We react to that there. We take those lows, we take the high, and then we are left with, we're left with this. We have this guy, and we have this guy, which you can take like this. Now, this is an example of, you know, extreme didn't really do a lot. The flip and change of character came from this inside bar, whether you're happy to just play this and, you know, go like that. Covers you quite nicely. You could say, oh, I'm going to just cover everything. It's only 2.7. It's not massive. Again, completely down to you how you do it. I would comfortably play that there because it's a really clean model. And it's just a difference of, look at this price action here and look at this price action. It's, you know, this is nice, but this is that first, the first mitigation. And a lot of the time, the first high or low into mitigation will fail. Also, you don't really get any kind of clean chalk. If anything, you just print equals. So it shows us we could run lower, and it's quite a big area. So you could play this, or you could play the reaction to it. So if we come back, you could say, I'm going to play the reaction off of that. If we go on the 1 minute quickly, just so those of you that don't use seconds can see. So you could essentially already be in this trade. Let's say you use 25%. It's going to be around there. And you covered that low. It's 3.9 pips. At minimum, it should take that high because it's not done, you know, it's not done its job. And we're, again, aligned with bullish intentions. So that's a 1 to 6. But when you start looking at a higher time frame scale, in theory, this could be the new start to run this high because this high didn't do anything. Okay, so you're looking at it and you're like, oh, actually, now I've got 1 to 8. And then you start to combine it with a 4 and you think, well, hang on a minute. If this is truly going to go, it should take out that high. That's the expectation, right? Now, obviously, it's a Friday, so you probably are not going to hold it, but maybe this high. Okay, it all depends. If it's your personal account, why not hold it? You're getting in a good position. So that's certainly a very valid entry on the 1M, and it's literally the same model. And there's a lot. Look how much safer it is trading news than trying to guess. Because imagine you, I don't know, saw that, thought it was part of some kind of supply chain, took that short off this wick, for instance, and you get that kind of slip. If it doesn't trigger, man, and you've got one pip stop, but let's say it doesn't trigger and it goes and does another 14 odd pips. You've got 14 pip slippage that you're risking there. Every time you enter the market, you're putting risk on the table. So is it actually worth the risk? Is it worth your time and effort or not? For me, the days of trying to catch an FP like that are long gone. I'd rather play the reaction. And this is what I mean by the reaction. Until it changes character and starts to set up just like this, not interested. Once it does, I'm like, okay, can I make sense of it? That's all it is can you make sense of it? Can you put risk on it? Go back to the 5 seconds. Like I say, you could have delayed this guy here. Sorry. And then from here, obviously, you could have got in this trade. If you hadn't got in because you wanted to play the lower level, let's say you wanted to play reaction to this and play the extreme. Again, for me, this is what caused the move. So I'd be happy to put risk on this. If you didn't, then you want to play the reaction of this. See if we get one. So we just take, have we taken the low? No, we haven't taken that low yet. And you get this nice reaction, whether it comes back or not. When it's like this, depending where my stop is, as long as I can put my stop below that low, I'd be quite comfortable to get in that. That's whether it comes back for us. I don't think it does. I think it goes to the moon. Yeah, she's gone. So, and this is occasions where playing the reaction, you kind of miss out because you're like, oh, damn, trade's gone. Let me just check it doesn't come back because it might. Nope, definitely goes. So you can see from that perspective, that's simply how you would play a reaction to the news. If you have the 5 second time frame, of course, you can play it here. Now, of course, you could have got in on the 5 seconds even lower. All I'd say is taking the first change of character on the 5 seconds, it can slap you in the arse a lot. And it's whether you're willing to take those hits or whether you just wait for the right level to confirm, such as the 1 minute, which prints this POI, right? Then you wait for the same sequence of events again. And like I say, I'd have happily got in this here. And yeah, I'd have been cool. And if it came lower, I'd play it again. This is the thing. And this is also the thing for me, like knocking your risks down a little bit when you're using the seconds, for instance, or if you're looking to get in more trades, which for me this year I'm really looking to sort of push the boundaries on what I can do and make sure I am growing and don't stay stagnant. I've knocked my risk down on the funded account to like 0.4. And I'm literally just going to get in every trade that I think makes sense, because taking 2, 3, 4 hits on a funded account with 1%, yeah, that's more or less you've lost your account, and it's stressful. And it happened to me a few times last year where I got close and it messed with my head. Whereas now I've reduced my risk. I've linked it to my personal. I'm trading my personal as my master. My prop account is just linked to it, lower risk, and I'm just taking trades. Last week I'd reckon I took about 6 losses last week, and I'd had two winners, but I finished like 30R. So it doesn't really matter to me. And I feel better because I feel like I'm learning again. I'm back in that like growth stage, which is really important. And it's something that I kind of put on the back burner a lot, was, trading this way. I put it on the back burner a little bit. What I want to say is as well, like, don't think, oh, Abby's changed, I've got to change. Oh my God, there must be a reason. It's just, I got to a certain point in my journey where I feel I'm ready to now try and level up even more. If you're still early in on the journey, even just playing the 15-minute stuff is probably better, especially if you have a job. And then as you go sort of full time, if that's what you want to do, maybe the 1M, and then from the 1M, the seconds. Like I say, I'm not just sitting on the 5 seconds every minute of every day. I'm only using it to confirm levels, just like that, because it's so powerful. And it means I get a smaller stop loss. It means I get a bigger risk reward. And it means I challenge myself because I got comfortable and I want to get out of my comfort zone. So yeah, I hope that helps, like with the questions when we say about, trade the reaction, wait for the news drop. You can see how playing the drop is a lot easier and the entry model's there. And obviously then we all know that trade goes and does absolute moon vibes. If you'd got in down here, look where it went. And, it probably will continue that trajectory on Monday and take out the high. So it's really important that you're not capping yourself because it's a news day. Obviously, if you don't want to trade it, you don't feel comfortable, then don't. But if you can make sense of it just like that, if that wasn't a news day, you would trade it. So what's the difference? It's just available liquidity. That's all it is. So, don't be scared of it and don't let it sort of freak you out.